All righty. Hello, everyone. Welcome to Growth and Value Stocks. As you can see, I am not the fabulous Mr. James Boyd, but I'm filling in for him because he is off playing in, I think, Honolulu. His son is getting married this week. So he's off, singing the wedding bell song and having some great fun with his family and a well-deserved time off. So today we're going to talk about growth and value stocks. Now, you guys know, like I teach trading a smaller account. We do, a lot of short-term trades in this class. And so I thought today I'd walk over, to this value side of the equation. And we're going to talk a little bit about growth too and the difference between the two and why you might want to, consider having both in your portfolio. So that's what we're going to talk about today. We're going to do some example trades as we always do. I've got Connie Hill with us in the chat. She's a friend and a fellow coach and knows a ton about all this stuff. Likely more than I do. So if you've got questions, don't hesitate to type them into the chat. And make sure you're following us both on LinkedIn and on X. My handle at Barb Armstrong CS and Connie's is at Connie Hill CS. So be there, be square. Connie, often posts in the morning, stocks that are on the move. And that's just a great resource that if you're not on X, like you're missing out. So just know that in this class, like I'm going to look at a bunch of different charts and we're going to have conversations about some different companies, but know that this is all for general information purposes only, none of it to be construed as a recommendation to trade any particular company or chart pattern or investment strategy. We're going to look at some charts, but we're also going to look at some fundamental analysis today, and know that neither one should be considered your sole means of investment research. We're using the Paper Money platform on the Thinkorswim desktop platform. It is a great place to learn and to make sure that you understand how the platform works and to make sure that you have a plan and understand your trading plan. With dividend paying stocks, one thing about paper money is that they don't pay paper money dividends into your paper money account. But even in a live account, just because something has paid a dividend in the past doesn't mean it will continue to pay a dividend in the future. Okay, so let's come over to the Thinkorswim tab. Spoiler alert, we're going to talk about ET today. And I'm not talking about the movie, although it was a great movie. I should go back and rewatch that. So the S&P 500 hit a new all-time high yesterday, and is pulling back a little bit today. But it's hard when something is sitting right up at an all-time high to characterize that trend as anything other than bullish, right? Just nod your head and agree with me on that one. And we have gone up 20% in the last 45 trading days. Yeah, not too shabby, I might say. And how about the NASDAQ? So this is our tech heavy index, no financials. I mean, this one has hit a new intraday high today and is pulling back just a hair. But this is up 35% from, the low that it clocked back here on, at the end of March. So pretty bullish there. Our small caps, often considered to be the canary in the coal mine, hit a new all-time high within the last week. And I guess I can probably just get rid of most of these lines, right? They don't really apply anymore. They're part of the history, not the current story. And then how about our Dow? And we just look at this in the context of positioning the market as a whole, and that hit a new all-time high yesterday. I'm not going to go into a lot more detail because Kevin Horner does such a fabulous job, 4 out of the 5 days of the week. The one thing that I will bring up is the sector watch list. And this is kind of important to our conversation today because when you look at stocks that are in the growth category, they tend to do well when the market is screaming hot market right now, and are often led by tech and consumer discretionary. And what are the top 2 sectors over the last 3 months? Would that be tech and consumer discretionary? Now, when people are nervous, they tend to head more to value stocks. And why is that? Because value stocks tend to be a little more stable. They tend to be less volatile. They often will pay a dividend. And right now, like consumer staples, is hauling up last place over the last 3 months. And when we see how bullish the market has been, we gain an understanding. So, if the market's really pulling back dramatically, that's when we tend to see, staples and utilities, which are often companies, especially with utilities, there's a huge investment to get in. So there's a moat around these and they tend to be, stable. And so that's one of the differences between growth and value. Now, if you were looking at value, having just said all that, like what characteristics might you be looking for? And so, one of the things you might be looking for is a PE ratio that is lower. And what do I mean by lower? Well, some would say, hey, if we've got a PE ratio of under 20, and what does that even mean? And on this one, and this is just a little script that I've added to the top of my chart, but if you want to see the PE ratio on any stock, if you come to the trade tab and then click this little arrow, it'll give you the PE ratio. And when we say that scripts are not guaranteed as to accuracy, that number came up slightly different. So this PE ratio being 11.6 tells us that for every $11.63 you invest in this company, it generates $1 of profit. Okay, that's what that means. Now, if you look at a company like Tesla, the PE ratio is 397 and it pays no dividend. So like this is clearly a growth stock. And for a long time, I don't know what year the S&P Tesla was added to the S&P, but it was after I joined as a coach. So it was within the last decade. And Tesla's been around for a long time. But in order to be added to the S&P, you have to show a profit for 4 quarters in a row. I believe that's one of the qualifying requirements to be added to the S&P. And so by the time Tesla was added to the S&P 500, it was a huge company, because they were continuing to invest hugely in their company's infrastructure, in vertical integration, in all of these things. And so when we look at the trade tab and look at their price earnings ratio, it is still an enormous number. And yet, does that mean people aren't investing in Tesla or buying the stock? Well, there have been 18 million shares traded already today. And we've got 5 hours left in the trading day. The options are thousands of contracts. On the contracts that have been open for a minute, this Ford 2750, probably just became available recently. That's why we don't have the same thousands of contracts that we do. You'll see the same on the call side. Okay. Oh, so it was added. Thank you. Thank you for looking that up, Connie. So the Tesla was added to the S&P in December of 2020. So 6 years ago. And it came in with a big splash, right? Because the market cap of this company is so big. Like if we look at the S&P, here's Tesla. It's still not a small player, right? A $1.6 trillion company, not as big as Nvidia, or Microsoft, but not small beans by any stretch. Okay. So there's Tesla. And if we come and we look at our Analyze tab, so what does our Analyze tab tell us? Well, it tells us, if you want to click on these, kind of what these different analysts think of Tesla, and there's detailed reports here. So this company was incorporated in 2003, now headquartered in Austin. But if we scroll down here and we look at our PE ratio, we have a current ratio of 341 and a 5-year average of 148. So it tells us that from a price earnings perspective, like this stock is pretty expensive right now. Okay. And that doesn't mean don't buy it. It doesn't mean it can't continue to go up. But compared to where it has often been traded, over the last 5 years, we're up in the nosebleed section. Now, if we look at a stock like Delta, it has a PE ratio of 11. It pays, not a huge dividend, but it pays a dividend now. And if we come to the Analyze tab on Delta, this company founded in 1924. So I don't know if you fly a lot. I fly a lot, and I fly pretty much exclusively Delta. And they were celebrating their 100th anniversary. And so there was a lot, every time you got on a plane, you were reminded of that. But if we look at the PE ratio here, the 5-year average is almost 17, and it's currently, the current PE on this is 9.7. And so not only is it a stock that's in what many value investors would look at as an attractive PE being under 20, but it's historically lower than it has typically been traded. Yeah. Somebody's saying, you should fly Southwest. I have no problems with most airlines. But when you live in a certain place and a certain airline is a hub, it makes it easier if you have to cancel a flight to, get another flight with that airline, that's hopefully going where you want to go. Anyway, not a recommendation. But when we look at Delta this year, it's up 14.5%. It has a PE ratio that's under 20. It's trading at a PE ratio that is lower than it has been for a while. And then when we look at, at the chart, we had this consolidation. Some might say it's a little bit maybe sloppy. And what do I mean by that? Well, just kind of a sloppy inverted head and shoulders is what I mean. Or some might say, well, just call it a cup and handle. But, this is about a $20 wide range here, and we had major support here for a while. If we look at this as about a $20 range, some might expect this to go up by maybe $20. So that would be almost off the charts. So if you wanted to do this as an income generating strategy, you might put this as a target. Now, we have a bit of a bull flag setting up here. Now, I teach getting started with technical analysis. Shannon, Delta does pay a dividend. It's a small dividend. It's just under 1%, but it also has an attractive PE. So if we're looking for a dividend, if we're looking for something that would be considered to be in the value category, now you might say, well, I'm not looking to do, a buy and hold. Well, it doesn't mean that a value stock might not still be attractive. But if you were looking to add some value stocks to your portfolio, maybe this might be one. That might be a candidate. So let me just clear this. And so let's say we wanted to add this to our portfolio. Let's say we want to have a position size of around 25,000 would be an appropriate position size. And we don't want to risk more than $2,500 on any one trade. Now, the technical analyst in me would say, okay, Barb, but this candle is a hammer. And a hammer technically requires confirmation, to say we're looking for a close above the high of the low day. So even with a value stock, now some people might say, I've done my analysis. I want to add this to my portfolio. I don't care about your candle requirements. But if you do care and you do want to still place this trade, you could say, well, okay, the high of today is 79.94. So I'm just going to take that 79.94. I'm going to add 50 cents to it. So I'm going to make it $80.44. So when and if the stock goes to $80.44, then I'd like to add it to my portfolio. And how much am I going to add? I'm going to add 300 shares because that would be about a $25,000 position. Okay. Yeah, so CB is saying, could you do a conditional order? Absolutely. And that's what we're going to do. We're going to say if it goes to 80.44, then buy. And if it continues to pull back, so it could pull all the way back to this 75. And so do we just put in this conditional order and then like forget it? No, like if it can, you're going to watch it daily. And if it continues to come back, then you may update your order and say, well, let's say it comes down here and we get another candle like this, like a hammer or an inverted hammer. We might then update our order to say, well, hey, if it goes to 76.15, get us in and buy it at a lower price. But based on where it is now, that would be our entry. And then if we want to do this as a longer term trade, we might put our stop below here, because looking back, this was a support level. Or you may say, well, if I get in here, I'm assuming it's going to go up. I'm going to look at the low of this candle today, this 78.93, and say, hey, if it goes 3% below that, I'm going to exit. So that would be 78.93 times 0.97. So 76.56. And so then how much are we risking? We're risking about $4 a share. And if we did 300 shares, that'd be about $1,200. So are we okay with that amount of risk? We are. So we're going to come to our trade tab. We're going to right click. We're going to buy custom with a stop. And we're going to make this a market order that's good till canceled. Our stop is also going to be good till canceled. And we're going to click our sprocket. And you could do this as a buy stop order. I don't know why this just feels more intuitive to me to say, hey, if this goes above 80.44, then get me in. And I'm going to do 300 shares. And then if it goes below 76.56, get me in. And I don't have a value stock category. So I am just, I am just going to when this fills, I'll go in and create a category for value stocks. Or you might say, I'm going to put this in my stocks with dividends, as another, because typically a value stock will often pay a dividend. Okay. So Barbara's asking the question, would you be concerned about fuel prices long term or only buy this on technicals? And that's an interesting question because like like when I go to the gas station, and I haven't been driving a lot lately, Barb, because I've been flying a lot. Like the last 4 weeks, I've been in, I'll have been in 4 different cities and 3 different states. So my car has mostly stayed in the garage, but I've been paying more for gas than I have in a long time. But yet Delta's stock, is still up 15% year to date. And so they're doing something right. Because I'm flying and those planes are largely full. So people are still traveling. So, it's working for them. Yeah, so the stop on this was 3% below today's low, because if we're buying, we're assuming, our not assumption, our expectation is that the stock is going to go up. Okay. Okay, so I want to look at another industry group and another stock. Now, this one came to my attention thanks to a client at an event. I'm going to San Diego this weekend. If you guys are there, please come up and introduce yourself. Kevin Horner's going to be there. Ben Watson's going to be there. We'd love to meet you. But ET, if you haven't heard of this company, it's up 19% year to date. The PE ratio on this 16.47, so it's under 20. And this dividend yield, whoo, Nelly, it pays almost a 7% dividend yield. Heavily traded. It's traded 3.5 million shares so far today. And when we look at the options on this, like 32,000, 45,000, like that's like Apple level of contracts. Like it's pretty heavily traded, right? And it's not that we don't talk about options in this class, but it just gives you a sense of whether or not this is a heavily traded stock. And so when we look at the chart on this has been uptrending. When we look at, since this low back here at the beginning of January, it's up 21%. And then if we come and we look at our Analyze tab, so it is in the energy sector, but it's, like the name implies, energy transfer. So they provide energy related services in the US, liquid natural gas. And so they have a lot of pipelines. It says here over 12,000 miles of natural gas transportation pipelines, and 20,000 miles of interstate natural gas pipelines, headquartered in Dallas. That makes sense, in 1996. So it's a company that's been around for a while. And then if we scroll down and we look, it's actually trading a little higher from a PE perspective, but it's still trading under 20. But the average over the last 5 years has been around 12. So it's kind of stayed in that value category. And so if you said, well, Delta didn't pay much of a dividend. Well, ET does pay a nice dividend. And so if you were looking for something that's going to generate some income, a stock like this, might be an interesting stock to add to your portfolio. And, it's trading at $19.71. And so if we said, okay, we're going to come in here and come to our calculator and say, well, we could have a $25,000 position. Oops, not 250,000, 25, 3 zeros. And I'm going to divide that by, let's call it 1972. So we could buy, 1,200 shares. And why might we do 1,200 instead of 1,267? Well, maybe we want the ability to be able maybe to sell a covered call or buy a protective put, to protect the position over earnings or something like that. And we're not going to go into that in this class. We're on the other side of earnings here. And the other thing we may want to look at is, what are people saying about this company? And it looks like, the last earnings, it did pull back a little bit, but Citigroup raised their price target to 23, JP Morgan to 24, like high this year is 20, Barclays 23, Morgan Stanley raised their price target last week to 23. So, when we look at that, that all seems fairly positive, didn't it? Doesn't it? And so where might we put a stop? Well, we might say, well, if I look at this, this trend, and look at this recent low here, that's 1911. Maybe we put our stop 3% below that. Or you could make it 5%, or you could make it 2%. But if we look at that 1911 times 0.97, that's 1854. So if I'm paying, so let's come to our scratch pad. Okay. Don't know why all of a sudden this is. Okay, well, let's not go to the scratch pad then. If I look at a stop of 1854 and we're getting in at 1972, 1972 minus 1854, we're risking about $1.20 a share. And if I multiply that by 1,200 shares, that's about $1,400. Now, when we have a stop loss order in place, does it guarantee that we'll get out at that price? It does not. So we could end up losing more, but we said we were comfortable. And let's come over. We were comfortable with a max loss of 2,500 on this account. And so if we're comfortable with that, then it gives us room that if it did gap down and we were stopped out, we might still be okay. Okay, so we're going to come to our trade tab. We're going to right click. We're going to buy custom with a stop. And we're going to do 1,200 shares here. And then when I click anywhere on these two lines, it will even these numbers up. We're going to get in at the current price, and then we're going to put a stop in place at 1854. You'll notice the default is always $1 less than the current price for a stop loss order, which, isn't far off what we wanted here on ET, but if it's on a stock like, a Tesla or an Apple or something like that, you may want your stop to be a little lower. And so we're going to put this in our stocks with dividends. Okay. And then when we come and we look at, once this fills, you'll notice here, so here's a couple of growth stocks. Oh, Micron's done well. Albemarle, not so much. We have some stocks with targets. Here's our stocks with dividends. And this is what the default is to set up a group. I think mine reset somehow. But, maybe we want to show dividend yield in here. And it has days, which pertains to options. And, this is not, has nothing to do with options. So we can take that out. And then I kind of like to see net liquidating value, like how much do we have invested in these dividend stocks? So we're going to add that. We're going to add dividend yield. So we're going to add that. And I'd like that to be above. And again, just because ET is paying this nice dividend right now, or a dividend that many would consider to be nice, doesn't mean that they might not discontinue that at some point. And then profit and loss percentage, we could add that as well. And that just lets us know the profit and loss gain on the value of the stock. It's not going to take dividends into account. And again, in paper money, dividends are actually not paid. So far we're breaking even on ET. We have a conditional order that we placed, remember, on, let's put these in by time placed. Oh, I must have put the other one in. Our Delta trade got put in the other account. So I will switch that around because that account won't fill. It won't fill in the other account. So let me just put this in. We were going to do 300 shares of Delta. So we're buying with a stop, and we only want to buy if it goes above 80.44, wasn't it? 80.44. Yep. If and or when it goes above 80.44. And again, how are we going to monitor this? Well, daily, we're going to come and look at the chart and see if it's either gone up. If it continues to pull back, then we may change, may change our entry price. And then our stop on this was at 76.56. And that was 300 shares. And we're going to make that good till canceled. Notice here, order triggered must be GTC or a plain market order. So confirm and send. So that's a $23,000 position. We didn't want it to be more than 25. So we're cool with that. We want to get in if it goes above 80.44, out if it pulls back below 76.56. And we're putting that in our dividend. Stocks with dividends. And then I'm going to come over to this other account because it will not fill. Because this account only has 30,000 in it. Well, it might fill, but it would take up all the cash in our account. We have 26,000 sitting in it, so we're just going to delete that. So thanks for humoring me. We're just going to cancel that. Okay. Okay, so what else might we consider looking at? Well, I lived in the Metro Detroit area for a long time. And when we look at stocks like Ford, their price, so this is, a $16 stock. And when we look at the PE ratio here, and come to the trade tab, this PE ratio this year is negative. The yield on it, the dividend yield is 3.8%. So some might consider that to be appealing, but this negative PE ratio, this is where fundamentally you might say, well, what's going on? Like, what happened with this company in 2025 that they went from making $1.46 a share to losing 2006? Did they have a big recall? And so you may want to go out and do a bit of research on this. Okay, it doesn't mean that the stock is no longer appealing, because their sales per share went up, their free cash flow went up, and we've seen, that look positive, but some other markers have not. And just because something's happened in the past doesn't mean it's going to happen in the future. But the 5-year average for this company has been, about $7.50 a share. So this has been in the value category for a very long time. And, it's also, paid a dividend, for a hot minute also. When we look at this 3.79%, but just because it's paying a dividend now, again, doesn't mean it will continue to do that. And so, this is one where you may want to do a little more research, go in and look at current news, look at some of, look at some of the, articles on this over the last year. So there are people moving their prices up, though, analysts. So B of A from 17 to 20. Deutsche Bank from 12 to 15. Well, hate to tell you, it's already there. Like that kind of cracks me up. Citigroup raised their price target to 19. So it seems like analysts, in spite of what, their target price may be, it looks like it's pretty bullish, but then we look at vehicle sales are falling. And it could be, well, it could be because of oil prices. It could be that, wallets are getting a little tighter. And you may just want to look. So here, Ford Motor recalls over 400,000 SUVs over a retractor defect, a seatbelt retractor defect. Like those things can be expensive to fix. Yeah. So, but this is certainly a stock in that value category. And you might look at this. I mean, look at this move it's had, like from here even. That's a 52% gain. And now it's setting up a bit of a bull flag. So, might this be, something that you might want to keep on your radar? Absolutely. How about GM? And these are, and I don't know why, I think it's kind of interesting. It's considered consumer discretionary, but I live in Salt Lake City now, and prior to that, I lived between Detroit and Ann Arbor, so Motor City. And then I was in Toronto. Now, Toronto is like New York. It's like the public transit is phenomenal. And I only drove a car when I was in Toronto to either go to the St. Lawrence Market early on a Saturday morning or to get out of town. But I really couldn't function here in Salt Lake City where I live, or I couldn't function where I lived in Michigan without a car. So you know, this is considered discretionary. Some might argue that point, and yet Coke, which is another famous value stock, is considered to be a staple, and yet. Like growing up for me, that was certainly a treat item. It was considered discretionary, not a staple. So like don't shoot the messenger here. I'm not picking which category things go into. Yeah. Yeah, if you guys ever go to Toronto, it's right in the heart of downtown. The St. Lawrence Market, it's a cool spot. And there's a little place that makes great crepes downstairs there. You may want to check it out. Every time I go to Toronto, I head over to the St. Lawrence Market. Okay, so anyway, back to our regular programming here. If we look at Coca-Cola and we're on the Analyze tab, and there's all kinds of really cool information on this tab if you've not spent any time here. But, it currently has a PE ratio of 24, which is a little less than it has been over the last 5 years. So it, but, Warren Buffett, who's a pretty famous investor, known as kind of a value investor, Coke is one that you'll always see him having. There's always a Coke on the table at his annual meetings, annual shareholder meetings. And if we look at this from a technical perspective, we might come over here. And then how about GM? So, because in my neighborhood, it was Ford, it was GM. When I moved from Toronto to Michigan, it's like, okay, I had a Jetta, and it's like, okay, I need to buy a car with an American label. I ended up with a Taurus Show. For any of you car buffs, they don't make it anymore, but it had a German engine and could rival a Porsche apparently for how fast it could get from 0 to 60. I had car seats in that car, so I wasn't testing that out. But we can see on this, like this double bottom, it's broken out, come back to retest. And then what's our PE ratio on this? 7.1. And to verify that, oh, now when I come over here, it says 32. So much for the value of my script. What the Sam Hill? Let's go over to the Analyze tab. Yeah, 29 is, so that's kind of interesting, isn't it? Like this says, in one spot it says 32, this says 29, the 5-year average at 10. So from a PE perspective, this is pretty expensive right now. And the chart would say that we technically have an entry. What type of dividend does it pay? Less than 1%. Yeah, Kevin is saying that he had a Taurus show. It was a fantastic car, wasn't it? I loved driving that car because I drove a stick and I love driving a stick. So anyway, yeah, so GM. So for you people that like driving cars, that show was a great car. It is no more. I wish they'd come out with another one, but anyway, GM, another stock that has been a value stock in the past and has, over the last 5 years, that's been its average, is now up in heady waters. So I just wanted to give you a different way to look at some value stocks. I'm going to mention one more before we wrap. 3M. So, and you can tell, like, we trade all kinds of different things in different classes. So I guess I can get rid of these. But this was, setting up maybe a bit of a double bottom pattern here, from a technical perspective. But this company has like an extraordinary number of patents. And when we look at our PE ratio here, now this again, like a lot of things are heading up into the Neverlands because the market has been pretty buoyant. The average over the last 5 years has been 13, and currently it's sitting at 28. But if we scroll up to the top here, we see this is a company that was founded in 1902, headquartered in St. Paul, Minnesota. They really have a global footprint, and they have, you can go out and Google it, an extraordinary number of patents, including the one to make sticky notes. Those are by 3M, and tape, and, like all kinds of, personal hygiene products, masking, packaging materials, like very interesting company. And you can do a little bit of research here, and you can come down and look at, get a perspective on, their fundamentals. And this is kind of an at a glance. And again, just because it's done something over the last 5 years doesn't mean that that's going to continue, but it gives you an idea of the stability of the stock. So another one that you may want to keep your eye on that some consider to be in that potentially a value category. So what have we done today? We've looked at a couple of the markers, or there are things like price earnings ratio and comparing that over time. And then married that with looking at the charts and where the stock is going. And we've placed a couple of example trades. So the two that we put in today were ET, which is in that energy space, and Delta. And with Delta, we put in a conditional order. Oh, I'm back on the wrong account. Pardon me. No wonder they're not showing up. So we did 1,200 shares of ET, and we put in this order on Delta. As we wrap up, I ask, there's a survey in the chat. So if you could fill out that survey, it's 2 questions. 1, I hated it. 10, I loved it. And there's everything in between. And then if you put a comment in, I will make sure I pass those on to Mr. James Boyd. He will be back next week. And they'll be looked at by management also. Also hit the like button. It moves this up in the algorithm so more people can find this content. And last but not least, hit the subscribe button if you haven't done that already. It gives you access to all of the archives. And I know that Connie has put in links to the archives for this class. And then follow Connie and I in the land of X. Barb Armstrong CS, Connie Hill CS. So that's a wrap for this class. Stay tuned. Lots of great content still to come your way today. Have an awesome day, and I'll see you in a webcast coming up soon. Take care, everyone. Bye for now.